You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
And don't be afraid to start slowly adding to companies that you really like, you like the story, and you think they're undervalued relative to their future prospects, especially once the market starts moving higher again, which I think we're kind of getting close to that happening again.
Thank you for tuning in to Mining Stock Education. I'm your host, Bill Powers. Today's show is brought to you by GR Silver Mining. They are advancing development stage silver and gold projects in the Rosario Mining District in Mexico. The company is fully funded for this year and next, having recently completed a $9 million financing a few months ago, and they are led by an excellent management team with Marcio, the president, CEO, and founder, having been part of the Silvercrest story and that success that we've seen in the junior silver market. So to find more information, please head on over to grsilvermining.com. Ticker symbol in the States is GRSLF, and in Toronto, GRSL. Well, many times every week I get at least one, if not 5 emails or messages asking about newsletter subscriptions in the junior mining sector, and Bill, which ones would you recommend? And one of the newsletters that I always recommend, and I did so this morning, the morning of this recording, to someone that emailed me, is for Dave Kranzler's Mining Stock Journal. To find more information, go to investmentresearchdynamics.com. Dave presents new stock ideas, many of the ideas that he will invest in his mining stock and gold precious metals fund. And you'll also get a macro overview for the sector, Dave's ideas there, as well as specific ideas. So if you're newer to the sector, you want generative ideas, this would be one of the newsletters that I would recommend. Again, find information at investmentresearchdynamics.com. With that said, Dave, welcome back onto the show.
Bill, thanks for having me on again. It's always a pleasure. I didn't know that you were sponsored by GR Silver. I'm glad they're sponsoring this show. I love GR Silver. In fact, I got myself and my fund and my subscribers into it below 20 cents. I don't know, about maybe 18 months ago or something. That's a great company. So, in fact, we were discussing earlier, when you decide to take profits and when you decide to move back into, at a price level below where you might have taken some profits. And GR Silver is one that I monitor every day, to add to my position after taking some profits when it was over 60 cents US.
Well, Dave, I'd like to start off with getting your thoughts on the junior miners. What's your commentary and your observation regarding the junior miners' performance relative to the gold silver prices and the ETF GDXJ?
That's a great question, Bill, and it's kind of a loaded question. Let me explain. There's not. Well, first of all, like, people throw the term junior out there kind of generically, and I mean, I think a lot of people consider junior to mean, under a couple $100 million market cap, or isn't producing, still exploring or transitioning into production, or the small cap producers. The definition in GDXJ, is dubious because it's got a lot of companies in that index that are billion-dollar market caps, and I don't look at those as juniors. When I refer to a junior, I pretty much look at the micro cap junior exploration stocks. I call them the venture capital juniors. The ones that are for sure under 100 million, and preferably under 50 or 30 million. The ones that are just starting to get started on a prospective project, because that's where your most upside is in the sector. But having said that, in terms of comparing the juniors generically to the price of the precious metals and the larger cap stocks or the GDXJ index, again, like I said, I don't consider GDXJ to be a true junior index. And that said, what I like about the microcap juniors is that it's a cherry pickers market. And you got to really sift through and do a lot of work and look at a lot of ideas to find ones that you think will give you the kind of upside returns that you would expect to get when you're investing in a what essentially could be, an evergreen or a brownfield junior development project. And I'm talking about, the types of returns anywhere from, a 5-bagger to a 20 or 30-bagger. And you mentioned Silvercrest Mine. Silvercrest Metals, which I got into and got subscribers into at 16 cents back in early 2016. I mean, that thing, I think it's been as high as $12. And so that's ideally the kind of returns I'm looking for. Now that's an outlier. You don't find those very often. But in terms of how the juniors have performed, say year to date, or even maybe since the bottom of the market in mid-March, again, if you want to just look at GDXJ, I would say, well, first of all, GDX and GDXJ have outperformed the S&P and the Dow, right? And we probably should expect that in a rising market, because it's perceived higher risk profile, so they're going to have as indices versus the S&P or the Dow or the Nasdaq, they're going to have a higher beta, market beta. But again, with the juniors that I look at, some have not done well, and they should not be doing well. Some have done really well, and they've outperformed even, the most vibrant tech stocks, the most bubblicious tech stocks, and some performed well and have started to, pulled way back since early August with this correction that we have in the sector. And those are the ones that I've been evaluating lately to figure out when and where I'm going to jump back into some positions in some of these, because they're companies that I already know well, and like to think I have a good feel of in terms of what their potential value is versus where they're trading right now in terms of market cap.
So Dave, if you're looking to initiate a position in a new junior that you haven't been following or haven't previously owned, can you walk us through some of the filters or qualifying things you would look for a new junior mining investment in today's world?
Sure. I've got a couple on deck right now that I'm looking hard at. I just finished doing a lot of work on an idea that's new for me, but it's not necessarily new to the market. And I had a long conversation with the CEO yesterday, and I'm going to feature it in my mining stock journal that comes out Thursday afternoon. There's I kind of have a checklist of variables that I look at that are guidelines, not hard and fast rules. So, the first thing I want to look at is, what is the project? What type of mineralization is it? Is it gold, silver? Silver the primary metal? Is it a silver gold project? Is it silver base metals? That type of thing. Is it gold copper or copper gold? Is it primarily copper with gold mixed in, or is it gold with some copper mixed in? So that's the first thing. And then I want to look at where it's located. What's the jurisdiction? Is it in a politically risky jurisdiction, or is it in a less risky jurisdiction like, North America? And every jurisdiction has its risks, and the risks can even be like Mexico overall is a very pro-mining country, but there's certain states in Mexico and localities within those states where a legal ruling can shut down a project or shut down a mine temporarily, if not indefinitely. We saw that with Tahoe Mining and the Escobal silver project down in Guatemala, which represented about 1% of Guatemala's GDP, and it's been shut down now for about 3 years. And it's on care and maintenance. Pan American Silver took it over. It's on care and maintenance indefinitely. So, I want to look at the jurisdiction and the risks. And along with that, I also want to look at management. What kind of track record does management have in their prior capacities? Another thing I like to look at is kind of the DNA of the area where the project is. Are there operating mines within the vicinity? Because that might dictate whether or not these juniors can prove up a resource, but is it what's the metallurgy? What does it take to extract the gold and silver out of the ore? Is it expensive? Is it going to be an open pit or an underground mine? That type of thing. And then how long is it? From the time that they start advancing the project, what's the timeline to when they think they might have be shovel ready? So there's all kinds of variables like that, and I get a lot of requests from subscribers to look at projects in Africa or Eastern Europe or some other areas that I would consider riskier jurisdictions, and they may be great projects. And for instance, West Africa, up till now, West Africa has been very, very pretty much pro mining. Easy, fairly easy jurisdiction to advance a project, get permitted and up and running. But I just see Africa as a potential political risk. I got burned on a project. I violated my rules, and I invested in a Banro, which was in the I guess they call it the Democratic Republic of Congo or something like that. But it turned out to be a very crooked operation, and the shareholders lost all their money, or lost a lot of money if you didn't sell it before it fell prey to the corruption.
Wasn't that stock traded on a major exchange too? Not
Yeah,
the
it was
OTC?
on. Yes, it was an Amex NYSE stock. So that's kind of an extreme example for an African country. But the way I look at it right now, there's so many undervalued projects relative to where gold and silver are now, and especially relative to where the price of gold and silver are going to go, in my opinion, that you don't really need to venture beyond North America to find plenty of good ideas. And then South America, there's plenty of really good ideas down there, and that's more of a country by country basis. But I look at South America, and again, it's specific to the countries, but I'm okay with most of the projects that I look at in South America. But like I said, right now between Mexico, the United States, and Canada, there's plenty of ideas for me to look at without stepping too far out on the risk spectrum in terms of jurisdictional risk.
Would you be willing to share where you have parked a little bit of your capital recently?
Well, actually, I just added to a position in a stock that I mentioned, I think maybe in the late spring on your podcast, which was Precipitate Gold, and they operate in the Dominican Republic, which is very much pro gold mining. I mean, it hosts one of the largest and most profitable gold mines in the world, the Barrick's Pueblo Viejo mine. But there's one particular province there that had a political issue that upheld GoldQuest's Romero project, 2.5 million roughly gold resource, and they were applying for an exploitation license to advance the project to into the level ready to put in a mine, and it got held up at a local court. Project on care and maintenance, I think it was probably about 3 years, fell down below 10 cents. Well, was elected in July, the stock went up 250, 300% because all of a sudden the president had the ability to overrule the local jurisdictional court ruling. And so that's I don't think it's happened yet, but they're probably going to get their exploitation license and be able to advance the project further. So, and Precipitate had a project just to the south of that, Wandahera project, and it's on trend with the Romero project, and similar geology, mineralization, and early exploration results look promising. They actually stopped spending money on that project until this legal issue was cleared up. So, but for me, the real juicy part of Precipitate Gold is their Pueblo Grande property, which is adjacent to Barrick's Pueblo Viejo property. And Barrick signed a deal, I think it's over 6 years. They got to spend something like $10 million in exploring the property and advancing it. And the exploration capital is front loaded. So I think they have to spend $2 million over the next 12 months or something like that. I forget the exact terms, but essentially, if the project has what I think it could have on the project, even if it's just 1 million or 2 million ounces of gold that Barrick is able to find, I mean, Precipitate will be a home run. And Barrick invested $1 million into Precipitate. And my guess is if Barrick, once they've done some drilling and it goes through their evaluation bureaucracy, if they like it, I think they'll buy out the project, or they may buy out Precipitate in its entirety, because it's got another project that's kind of adjacent to the Pueblo Grande project, the Ponton project, and it's kind of a similar story. It was, a property that companies like Barrick thought were too small, and their bureaucratic apparatus wouldn't let them spend some money on it, and so Precipitate got it for a song, and they're going to start doing preliminary exploration on it. And if that looks promising, I could see where Barrick signs the same type of deal on the Ponton project, because if they can find, even just a few million ounces of gold, they can use that to feed their mill at Pueblo Viejo. So honestly, I mean, Precipitate has, I think when I first mentioned it, it was 10, 11 cents, and it ran up to, over the summer, it ran up to, I think the high close was 29 cents. And it's pulled back now to 19 cents. And if anything, the prospects for the company's projects in the Dominican Republic have gotten even stronger. So to me, at a 19 or $20 million market cap for this stock, I think it's the upside. You're looking at a 3 to 5 times potential upside here with limited downside. And so that's kind of how I look at these things. And like I said, I added to Precipitate last week in my fund. So
what percentage of your fund would be in the precious metals explorers?
Well, we're 50-50 physical bullion and mining stocks, and most of the mining stock portfolio is in the juniors. Though I do have some smaller cap producer stocks in there, like Fortuna and New Gold. And I've got some, again, micro cap producers like Northern Vertex, which has a very high grade gold mine. It's operating. It's throwing off plenty of cash flow in Arizona. And they're currently, the upside in this thing is they've got about a 385,000 ounce gold resource. Again, it's very high grade. And so it's got remarkable upside leverage to a rising price of gold. And they think that there's possibility of tripling the size of the resource, if not more than tripling it. So that they've got a bunch of mineralized targets on their property that have never been drilled before, and they're starting to drill those out. So, and for the latest quarter, for the third quarter, they haven't released their financials yet, but they had record gold production. So that's not going to give you the type of upside that a Precipitate will. But for me, a company that's producing small cap and has, 2 times upside potential with gold at the price where it is now, to me, that's a no-brainer. Now, if and when gold goes up to 2,500, I mean, then you're talking about, and this applies to all the producers and even the juniors. Then you're talking about, a different, we're going to be discussing the market caps at 2 to 3 times the market caps where they're trading right now, because, just because of the upside leverage to gold and silver.
Dave, if you're looking at Canada, in North America, of course, is there a specific geological trend or region that you like to find explorcos?
The whole country just seems to have gold and silver copper mineralization. Just go take a drive in the country there and stick a drill bit in the ground, and you'll find mineralization. I think the hot areas right now are Timmins, Abitibi, the Red Lake area, Quebec, Toronto. Obviously, British Columbia has always been a very hot place. I think I only have one investment right now that's focused in British Columbia, although New Gold has their new Afton project, obviously. But Brixton Metals is that's really the only junior I have right now that has projects in British Columbia. But they've also got a couple other very interesting projects. So, but I think the Timmins and Abitibi regions are eventually going to get consolidated by the large caps that are, especially when the price of gold goes higher, you're going to see a lot of these companies like Kirkland Lake and Agnico, et cetera. They're going to be looking to add ounces to their reserves, and it's the best. There's going to be mergers, obviously, large caps merging with mid caps, but there's also going to be a lot of these juniors are going to get picked off and taken over. So one that I like that's in the Abitibi gold belt is Amex Exploration, and I guess the best way to describe this one. And again, it's still pretty early stage in its exploration process, very early. But they've, to date, they've produced some very, very interesting assays from their drilling. And I kind of look at it as a potential smaller scale version of Great Bear, which obviously has had that stock's been an incredible success story. I didn't jump on that train until it was at around $3 because I didn't believe it at first, and then I listened to management present and talk to management, and I was just like, holy crap, this thing's gonna be a massive gold mine one day. So I think Amex has that potential. Again, there's still a lot of risk there, and they have a lot more drilling to prove up. But the stock right now is trading around the low $2 US, and I think I actually put it in my mining stock journal in July and invested in it myself and in my fund when it was in the high twos. So that's another one that I'm looking at right now to decide, if and when I want to add to my position.
Thanks for sharing that, Dave. And as mining speculators look to Q4, obviously we have a presidential election. Any parting advice you could leave with us?
The way I view the market right now is it's pulling. We had a huge run since mid-March. I get people saying, oh, that these things aren't going anywhere, or I'm underwater in my positions. Well, yeah. Like I said, the entire sector as a whole has outperformed every other sector in the stock market since mid-March. I'm not saying it's outperformed specific tech bubble stocks per se, but some of the juniors have. So we had a big run up in the market, and it's natural for the market to pull back and consolidate. And again, anything can happen. If we have a big sell-off in the stock market, the mining sector is going to get hit as well. But I think if that does happen in that scenario, you want to have cash ready so that you can take advantage of lower prices, like as happened in March. The mining stocks went down in sympathy with the stock market, and they started moving higher before the Fed's intervention juiced the stock market. So I guess the best advice is, if you're underwater in positions that you put on over the summer, take a look at them and use research and try to evaluate where you think that company and its project, or that company and its mining operation, where you think it should be worth versus where it's trading right now in terms of market cap. And if it's well below what you think it's worth, and don't just look at the current price of gold, because I think a lot of these, especially the juniors, are very undervalued relative to the current price of gold and silver. Where do you think, a Fortuna Silver or a New Gold or an Agnico Eagle, what should that be worth if the price of gold goes to 2,500 or 3,000, which is where I think we're eventually headed? And evaluate your holdings like that. And some of these stocks, not all of them are undervalued. Some of the juniors had remarkable run-ups, and they're still overvalued. So don't be afraid to take losses on companies that you decide are undervalued, and don't be afraid to start slowly adding to companies that you really like. You like the story, and you think they're undervalued relative to their future prospects, especially once the market starts moving higher again, which I think we're kind of getting close to that happening again.
Yeah, Dave, thank you for that advice. Follow Dave on Twitter if you don't already at INVRES Dynamics. And of course, David's website is investmentresearchdynamics.com. A link to both the Twitter and the website are in the show notes. And if you're interested in the Mining Stock Journal, you can find more info at Dave's website and can reach out to him there.
I just wanted to add really quickly, when a new subscriber signs up, I send out a welcome email that includes several recent back issues, so that if you kind of sift through them all, you can kind of get a feel for the stocks that I like, the stocks I'm invested in, and why I like them and why I'm invested in them. And also I discuss what I see as the potential upside versus the potential downside.
Risk reward.
Yes.
Excellent. Well, thanks for coming on today's show, Dave.
Thanks for having me, Bill. It's good chatting with you again.